Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving an outlook of the markets for the week of the 7th of March until the 11th. Now before we get started, please note that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment and trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. Now, starting things off with stocks, I would say that an area or sector of stocks to keep an eye on will be stocks with the energy sector in focus, such as Chevron and ExxonMobil, for example. Right here in front of you, you can see the chart of Chevron, where you can essentially see from last year, around October, November, which was when we started having the first reports of Russia building up its troops along the Ukrainian border. Prices were consolidating for a couple of weeks before we broke above the swing high right here, and ever since we've just been trading higher and higher. And this candlestick that you can see right here is a candlestick of last week, which is essentially when the full-scale invasion by Russia was also announced. Again, this is the chart of Chevron on the weekly time frame. If I switch to ExxonMobil as well, which is one of the main competitors of Chevron as well, you pretty much see a similar picture being painted. Around October, November last year, we had again this consolidation. We broke above this swing high right here, and ever since we've just been trading higher and higher, and again with this candlestick being with the announcement of the full-scale invasion against Ukraine last week. It's also worth mentioning that we had the S&P energy sector gaining as much as 8% over the course of last week, and without any signs of the crisis wearing off for the time being. We could expect this narrative with these stocks to continue throughout the course of next week as well. So again, yeah, definitely a sector that I would say would be worth keeping an eye on. Now, on the Forex front, we'll be having some key economic data coming out next week. While Monday's looking like it's going to be a quiet day as far as the economic calendar itself. If we have any major developments over the weekend leading up to Monday, we could see a volatile start as early as that. So if I just switch the economic calendar, you can find simply by going to the home page of Tixee. You can hover over the education and research tab and then clicking on the economic calendar. Again, you can use the filters here to adjust the data as you want. Usually I like choosing either the medium or high impact events. We'll stick to the medium for the time being, and you can set it to next week. This is with regards to Monday, and again, as we said, things will start picking up from Tuesday onwards as we'll have the GDP data coming out of the EU, and later during the day we'll have the trade balance coming out of the US. Now, something that I really like with the economic calendar here as well is you'll see this little tooltip right here, which essentially shows you, depending on the event, it shows you what kind of volatility you can expect after the specific event has been released. So this is a pretty good indicator for you to gauge more or less what size of movements you can expect after a particular event. And it can also show you how important an event is, because if you just see a small movement of, like, let's say on average 5 pips after that event, then maybe it's not giving you enough of a range to work with. But if you're seeing like 35, 50 pips or even more, then it could be an event to keep your eyes on. So this is as far as Tuesday. Then moving on to Wednesday, as always, we'll be having the crude oil inventory report, which again, with oil and its sector in general being one to keep an eye on, it's also worth keeping an eye on the actual inventory report with regards to the economic calendar as well. So yeah, moving on to Wednesday. Thursday, the day will start with the building permits in Australia. However, the key event to be focusing on, in my opinion, would be the European Central Bank's interest rate decision later during the day, and we'll then be having the core or the CPI inflation rate coming out of the US as well. And then lastly, moving on to Friday, we'll be having the trade balance figure coming out of the UK, as well as the GDP figure being the more important one, I'd say, which will be released pretty much. You can see this flurry of events basically coming out at the same time, at 7 o'clock UK time. So if it's a market you'll be trading, then definitely you should be keeping an eye on these events as well. And then finishing off the day, we'll be having the employment change coming out of Canada. Again, the Canadian dollar is also a currency to be keeping on your radar, seeing as how it's pretty correlated with oil prices as well. So aside from the oil movements affecting the price, we'll also be having this key economic data, which could impact prices even further. So yeah, this is with regards to Forex. Again, just to summarize some of the currencies that are, I would say, pretty volatile right now given the crisis. It will be the safe haven currencies such as the Swiss franc and the Japanese yen, as well as, like we said, the Canadian dollar, seeing as how it's correlated with oil, and then the Australian dollar as well, seeing as how it's correlated with gold prices. Which again, this will also lead me to our next topic, which is going to be oil and gold. Again, obviously an asset class of key interest, seeing as how both of these two assets were and are still heavily impacted by the ongoing crisis. If I pull up the chart of oil, we'll be able to see that oil prices alone, they rallied last week by 25%, which made up half of its yearly gains with regards to this year in the space of just a single week. We can see it's been in a pretty steady upward movement over the last, I'd say, would be 15 more or less weeks. So if we just count 1, 2, 3, 4, 5, 6, 7, 12, 13 weeks. We've only had 3 weeks in the red, and as you can see by the candlesticks themselves, the sizes they weren't that significant compared to the weeks where it ended in the green. So yeah, it rallied by 25% last week. Prices are now trading firmly above the $100 mark. We can see they're trading at $113, which could very well continue to be the norm if the crisis in Ukraine does not de-escalate. Not only that, but Saudi Arabia's state-owned oil company Aramco, they announced, meanwhile, that the highest hike ever in the official selling price to Asia, raising the premium for a barrel of Arab light crude meant for April delivery by $4.95. So this was also stated by an article coming from Reuters. So we can see it's definitely building the case surrounding oil prices and the fact that they've been rising by so much over the course of the last couple of weeks. And meanwhile, if we just switch to gold, gold also showed some very strong positive signs last week. Aside from the ongoing crisis in Ukraine, if you remember last week we also had the NFP report on Friday, which despite the fact that it showed a positive picture with regards to the job market in the US, and we had, I think the expectation was already 400,000 jobs being created, and the actual figure came in at 678,000, which is a pretty significant increase with regards to the expectation. And usually you'd expect this to boost the US dollar, which it did, and in hence you'd expect gold prices maybe to drop. But again, given the ongoing crisis, you can see what's actually driving the prices of gold, which is obviously the conflict between Ukraine and Russia, and not the NFP report that came out on Friday last week. Gold rose by 7.5% or $140 last week, posting its best week in 2 years. After this, we're just going to be covering cryptocurrencies as well. If I switch to Bitcoin right here, and I'll just remove one of the 2 EMAs, I'm just going to leave, this is the 21 period EMA. And we can see that even though one could expect that cryptos wouldn't be heavily affected, they did face significant headwinds with regards to price movements. And we can see here, if I just zoom in a little bit, that even though Bitcoin at one point during the week, it was up, if we see here, more than 15%, close to 20% even, it gave back all of those gains, essentially dropping by 15%. at the time of recording this webinar, and showing a strong rejection in price, which could mean that prices are pressured lower even further. We can see here by the wick of the candlestick how we even tried to break above the exponential moving average. However, we rejected strongly and are now trading around this mark right here. Aside from that, if we look at the prices themselves, they broke below the $40,000 mark, and the prices are also forming a bearish ABCD pattern, which is this pattern right here. If I switch on the line chart, you'll be able to see the A, the B, the CD was actually formed, but because the candlestick wick was rejected, the prices you can see are right here, but at one point it was obviously right here as well. So yeah, this is a bearish ABCD pattern, which we can cover in more detail at a later video, but just something worth mentioning since we're looking at the chart of Bitcoin as well. And yeah, there you have it. This as far as the outlook for next week markets. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.